This is Bill Kelly, and this is the Stock Market Heart Attack Report. Something different you might not have heard before. I came across this one day in my office. I was trying to figure out these markets, the extensive volatility, what was happening with different types of investments, and I decided to trace back to when I started into the business in 1994, and I wanted to discover just what had been happening all that time. Are we really in a bull market? Are we in a bear market? Or is the market just preparing itself to have a heart attack and simply collapse? So I did a lot of study of bubbles. I did a lot of graphing, a lot of charting, but the most important thing I did was to study cycles. So this is not investment advice. We are not suggesting that you buy or sell any security. Consult with all of your professionals. Get prospectuses of anything you may want to buy. Get all the information and consult a tax consultant at all times for your tax consequences of any transaction. Consult a licensed professional. If you want to call us at 888-800-1881, ask for me personally. We will get you a free hard copy of this report. I'll also look at any portfolio you'd like to send us and analyze it for you, and we'd be pleased to do that at no charge to you in the near future. We're going to eventually have to start charging as we're getting deluged with requests, but we will give you a straightforward analysis of any portfolio if you send it to us, and I am a registered investment advisor, and we can do that. We're licensed to do that, so we are licensed professionals. So what we do has some meaning, at least to me. But this is a sine wave. This is a sine wave that occurs in nature many times. If you throw a pebble onto a pond, you're going to see ripples above the surface of the water. Unbeknownst to you, there are ripples underneath the water. In a perfect world with no gravity and no friction, this is what a sine wave would look like if you threw a pebble into the water. So the frequency is the number of times that the dip occurs. So this is 2 times the frequency per unit. The amplitude is the amount up or down. So the amplitude here, the amplitude is 0.75, or if you combine both, it is 1.50. That's the amplitude. It's the amount of increase or decrease of the signal from the baseline. So this is a sine wave, and it's perfect. As you know, things aren't perfect. So I decided to chart the market since 1994 when I came into the business. Now we know there was a tremendous upside to the market in the 90s. The tech boom, the tech bubble, those of you who were involved with your 401ks, 403bs, IRAs, you had securities. Many of those were mutual funds. Some of them were variable annuities. Well, there's a great upside to securities, but on the other hand, there can also be a downside. So I looked at the first crash I can remember. It was the summer of 1998. Back then, people were predicting or forecasting 18% growth in many of the illustrations that we saw back then. But the market dropped from 9,500 to 7,500 suddenly in late summer of 1998, and it was the first shudder. It was the first instance of what was to come, ladies and gentlemen, in the most volatile market probably in history, if you look across for the next 13 years. From 1997 basically to 2011. The summer of 2011, which is 14 years, we had some of the most incredible volatility we'd ever experienced. If we go back to 1998, everyone's saying, well, it's a stock market. It gradually goes up over time. We're in a secular bear market, and this is a cyclical, thus we were in a secular bull market, I beg your pardon, and this is a cyclical bear. So just ignore it. Well, it really was a sign of things to come, ladies and gentlemen, but there was no way for anyone to determine that at the time. Everything looked hunky-dory. Right at this point, we had many companies that were overvalued. The S&P PE was approaching 40 at this time. So basically, we had the first 2,000 point drop, 20% drop, and it took a matter of a few weeks, and the market obviously dropped precipitously. We then moved on up, as you remember, and the market went up to 11,500. 11,005, and had the highest closing in history up until that time, in somewhere around the new year of the year 2000, the new millennium. Then we had a series of ticks downward, ladies and gentlemen, as you can see. The interesting thing about this drop was low volume, as you can see. Now the drops as we move forward, World Trade Center, 02, the market uncertainty, and 03, you can see that this is the volume indicator below here. You can see very high volume on a dropping or a decreasing index. So that's interesting. People were doing what? They were running to cash here. So as they ran to cash, you can see lower volume causing the market to increase. Why? Because many people ran to cash, so there were fewer shareholders, fewer buyers out there, so volume didn't need to increase very much in order to drive the markets up. And this perhaps, as we moved into 08 and we approached 14,000, everything looked hunky-dory. And you can see the magic number here is 7,500, 7,500, 7,000, 6,000, 6,500. As you see these numbers, as we depart from 7,500 back in 03 and 04, what's everyone saying when we get to 14,000? Well, son of a gun, there's no way we're ever going to see 7,000 again. When we were at 11.6 here, people said the same thing. There's no way we're going to see 7,000 again. And we kept saying that to ourselves until each successive time we did. We saw it again and again and again. Now, my dad had a heart attack. Back in 1985, I came out of my bedroom one night to get some cranberry juice, and I looked in the living room. My dad was sitting in the easy chair, all dressed, and I said, "What's going on, Dad?" He said, "I'm having a heart attack." I said, "Well, geez, you don't look very nervous." He said, "I already called the fire department. They're on their way. The ambulance is coming. They're not going to use the siren. They're going to come in the big red ambulance." So this is how my dad chose to have his heart attack. So we could say maybe he was about here when he had his heart attack. Now, the one thing my dad did was he went to the hospital. He got care quickly, and he was taken care of. But when he came back from the hospital, he didn't follow his doctor's orders. So my dad kind of went along like this. And he didn't follow his doctor's orders, so somewhere 4 or 5 years later, I get a call from Mom, and she said, "Dad's sitting up in the living room all dressed, and he's having a heart attack, and he already called the ambulance." So here we are with the heart attack. So we all run into the hospital to see Dad. He has bypass surgery, and guess what? He decides to do everything the doctor says. Everything the doctor says. And this is Dad. He starts to get healthier. He does his walking. He cuts down on the fatty foods. He got away from all kinds of smoke. And he went somewhere up in here and lived the rest of his life at a very high level. Unfortunately, here was the warning. Here was him not heeding the warning. And here is when my father heeded the warning, and he got to stay at this level. We didn't heed the warning, ladies and gentlemen. We didn't heed the warning. You can see very high volume here, dragging this market down. In 2009, of course. So we didn't heed the warning. Well, I had this chart up in my office, and a woman came in and sat down. I have a huge screen for my clients and folks who visit with me to look at. Now, what happens on this screen is I put up different things for their accounts. I forgot, and I left this report up just the way you're looking at it now, and guess what? I forgot to take it down. So the woman was sitting there. I came into the office to greet the woman. She was sitting down, and she said, "Wow, you have diagram of a heart attack up on the screen. I said, what? She said, did someone have a heart attack? I said, no. I said, that is a diagram of the market since 1994, courtesy of BigCharts.com. And she just burst out laughing. She said, well, it looks like the market's having a heart attack because I'm a cardiac nurse. So then I decided, well, how can I find this out for sure? Well, I went online and I got a diagram of a heart attack. And I thought to myself, my goodness, this looks like 1980s to the 1990s, and this looks like that volatility we've been seeing. But each successive peak is creating a deeper trough. And that's what the heart attack looks like on a screen. And what I would say to you, is the market having a heart attack? If you think it is, call for a copy of our book, 888-800-1881. It's Senior Safe Money Strategies. Get the copy of the book. It's a $17.95 book, but for the folks who've called in or come onto the website, it's yours at no cost. If you want an evaluation of any portfolio, any type of security, we are registered investment advisors. We'd be happy to do that for you. Our number is 888-800-1881. Call us. There are several other publications in which you may be interested that have to do with investments, retirement, and making plans for your future and the future of your family. So we appreciate you tuning in today. We enjoyed doing the presentation, and we'll talk to you soon. 888-800-1881. Ask for Bill Kelly. Ask for a copy of The Stock Market Heart Attack. Ask for a copy of Senior Safe Money Strategies.